Hey guys, welcome back to another market review. Okay, so it's been a hell of a week. Last week was NFP week, so we don't trade on Thursdays and Fridays, so there was really no need to do a market review for a day that you only trade three times, or there's only opportunities to trade three times, right? Well, I hope you're doing fine. I hope you're withdrawing, making money, and so on, because that's the most important aspect. All right. So this is this week's price action in a glance. You can see where Monday started, and we have the new week opening gap that's highlighted there or outlined there. The new week opening gap high and the new week opening gap low. So we have price dropping into that gap in the morning. I'm sorry, on Monday, and trading back up, breaking through it, trading back up, and this week was just sort of lot of back and forth, going back up, coming down, going back up, coming down, and so on and so forth. But we're going to break through this price action and see how possibly you could pick a trade this week, and I really hope you learn something from it. Okay, let's look at Monday. Okay, so Monday, this was the new week opening gap, high and low. And seriously, there was nothing to trade on Monday. I did not pick any trade on Monday because I wanted price to come for the sell side liquidity. You can see that there. I wanted price to come for the sell side liquidity before I can buy to this high or to this Friday's fair value gap. But you can see the Friday's fair value gap very clear here. This is the Friday's fair value gap, and you can see there are a lot of fair value gaps there. So price just trades into that. Okay, so that was what Monday did, back and forth, back and forth. This is mostly like seek and destroy, but I believe some people took the sell or took the buy from the new week opening gap to the high, but this was not my setup, so I just let it slide. Anyways, let's look at Tuesday. I want to make this video as short as I can, as possibly as I can. Okay, so we have that sell liquidity, and we have the intraday fair value gap. And if you don't know how to use this particular setup or how to treat this particular setup, you can find a video intraday AMD where I explain how price leaves this fair value gap within the day and runs into it, then slashes down. But let's zoom into there and see how possibly we could pick a trade there. Okay, you can see price trades into that fair value gap, create this low, rallies high again, and all of this level is currently efficient. So look at this particular, let's look at this price action because it's something kind of strange. All of this level is efficient, not inefficient. Then price finally breaks through that low. To some, it can be a break of structure, MSS or whatever, but that's just a break of a low for me, like I keep saying. And in this case, you're waiting for price to retrace into the nearest fair value gap. So we have this fair value gap there, which is the nearest. You can see that's fair value gap, that rectangle box there, that's the entry. Punch sell there, and where are you taking your profits? Taking profit at this low. There's a sell liquidity of I think previous 3 weeks, and that is the take profit. The take profit is there on that low. So you sell from there, take profit there. Even though price keep going downward, that's none of your business. You're taking profit. Okay, so let's look at Wednesday. Now after that drop on Tuesday from selling with the intraday AMD, drop on Tuesday, price rallies, then drops again on Wednesday. But how possibly could you have picked this trade? There are some guys in the community that pick the sell, but this is 15-minute time frame. So if you look at it very well, there's really no setup to sell, right? There's really no setup to sell on Wednesday. So in this case, price gave no setup to sell, but only give a setup to buy. So this is also previous day low. You can see that Wednesday, Tuesday, previous day low. Price attacked that, and you use the PDRA entry matrix I taught you, I think in one of the videos, right? So let's look at that. This is the low, this is the high created, and price broke this level here. To some of you, that's not a high, but to me it is, right? I know what I'm looking for. This is Nasdaq, right? And what I thought is that when you have this level marked out, you want to find your equilibrium so that then you can know which side is your premium and which side is your discount. And when you find out your premium and discount on the 5 minute time frame, what you do is go to the 1 minute time frame and look for the draw liquidity or the discount if you're buying, or the draw liquidity on the premium if you're selling. In this case, we are buying, so we are going to look for the draw liquidity on the um discount. This is 1 minute time frame. You can see that high that was broken, and you can see the high and the low, which give us our premium and discount array. Okay, and I also said something about if a discount on the 1 minute time frame is still efficient, you can see all of these levels are efficient, then you can use high and lows. So this act as an inducement, but it's also a drawn liquidity because that's a low to target. That's a liquidity. That is sell side liquidity for price to target. Price takes that out in the discount of that PDRA metrics. Price takes that out, even though it was too late already. I think this was 4 p.m. That's 4 p.m. So that was already during New York deepest noon towards when market closed. So probably I would not advise anybody to take this trade, but I knew what I was doing, so I just it was already 4 p.m. is where my trading time, my trading hour closes. Okay, 4 p.m. is where my trading hour closes, and price just dropped into my entry exactly that 4 p.m. So I was left with two choice: leave the trade or don't trade. So I just pick the trade, set my stop loss, set my target, and just leave it. My target was to the new week opening gap low. So I set my target. The price just kept consolidating after market close for that 1 hour, and price reached for that target, even break through it on the next day, and that's how I was able to take my profit. And on the next day, New York session, you're looking for that's Thursday. You're looking for another setup, right? What is the setup? Previous day high, previous day low, previous day favor value gap. But looking at it, there's no previous day favor value gap. You know, there's previous day high, which is this. There's previous day high, which is this. Price tackles this and sell off to the previous day low, sell side liquidity. This thing is actually very simple. If you just know when once a new day opens, just outline every draw liquidity there on the chart. What is a draw liquidity? A high, a low, or a fair value gap. So when the day opens, what I do is I mark my sell side liquidity if it's there. I mark my buy side liquidity, and I don't trade London. So I want London to do all the consolidations and all of those things. I just wait for New York to come with a clarification. Okay. So when I mark out my sell side liquidity, my buy side liquidity, my fair value gaps, everything, I'll just wait for the one price trades into gives me a entry pattern, and that's what I'm picking. As simple as that, guys. No complications. So price took out this buy side liquidity, although it was just with weeks, but that is also a reading. So we're going to zoom into that level and see how we could possibly pick trade. Yeah, because all of this was Terex reward show to me, but I took partials. So this is 1 minute zoomed in that sell side liquidity. That's the high there. Price took out, and on the 1 minute you can see this a breaker block. This block here, this green candle, is a breaker block. We have this high, price took out that high and break this low, so that's a breaker block, right? You can also use that as your entry, but for precise entries and good risk to reward ratio, this fair value gap was my entry. So that fair value gap there, even when price pretended to stop the fair value gap. I know some people here will chase the market because this is what I do most times before, not now. I don't chase markets again, but before, that's that feeling when you see price miss your entry like this and start dropping, then you chase the market and price comes back to your entry. I've done this so many times before, but if you understand what they pay you're trading, then you not have to fear. You just have that confidence that price will come for your entry. I stopped missing trades, I think 4 months ago, because I kind of redefined my entry pattern, how I enter trades, how I approach trades to a way that I cannot miss trades. If I have a good setup, I'll make sure that I don't miss that particular trade. I take it at all costs. And unicorn entry is a very good entry pattern for those kind of setups. For to solve the miss entries, unicorn entry. If you don't know anything about unicorn entry, you can find a video where I talk about different entry patterns. Okay. So now price trades into that fair value gap, and that was my entry there. I was punching buttons there. My first partials was to the new week opening gap, while I left the rest of the trade run to the sell side liquidity, and this was 10 hour possibly. Okay, so that's a very good trade, guys. I don't know if you caught that trade on Thursday, but that was a very good trade. Let's look at Friday. So when Friday opened, what was the draw on liquidities to mark? So I marked out Thursday's high, which is this. I marked out Thursday high. I marked out Thursday's low, just high liquidity. What do you do in this case? So I wanted price honestly to take out this high if you wanted to go low, but price did not. Price pushed down, and on New York 8:30 p.m. sorry 8:30 a.m. that news price drive down this sell side liquidity with this imbalance. And I don't know if you guys still remember the lecture where I made about insight on liquidities that when price sticks out a low with momentum with strong displacement, what does price do? Price trades back into that fair value gap and continue downwards. This particular lecture, see, all of the lectures I drop, all of the topics I drop, all these things are beautiful pieces of puzzles. You need to study them and add them together to form your own unique model. Now, how you approach the market might not be the same or with how I approach the market, but you can study how I approach the market and create something that best fits your mindset. Okay, ICT teaches a lot of things. I learned from ICT, but does not mean that we treat exactly the same thing. He has his own way of seeing the market. I have my own way of seeing the market, but I learned from him. I created my module out of his own concept, and you can also do that. You can create your module out of my own concept. Have your own unique way. Every trader has their own unique way of how they see the market. In coding or in programming, they call it pseudocode. Every programmer has that pseudocode. Okay, so you can also apply these things to whatever pair you're trading, Euro USD, GBP USD, whatever it is. Okay, so let's zoom in inside that fair value gap to see how we could possibly pick trades there. Okay, so this is the fair value gap. This is intraday AMD trade, guys. This is intraday AMD setup. If you've not watched that particular video, trust me, you're missing. You go back after this particular lecture. I want you to go back to insight on liquidities. That's the first video you should watch. Then um go back to intraday AMD video. That's the second video you should watch. You clearly understand most of the things I'm explaining here. And if you are not following the lecture at all, then I advise you to go back to episode one and follow the lecture. Then you understand almost everything I'm explaining here. Okay, so I'll zoom into that value gap now. So this is the 1 minute time frame, and I know there's going to be questions of why I mostly use the 1 minute time frame for entry. That's because 1 minute time frame gives me the good risk to reward ratio, and trust me, it takes time to understand the 1 minute time frame. Do not attempt pick your entries from 5 minutes and so on, but the 1 minute time frame needs experience. Okay, it needs a lot of experience. So just the same thing we did on Wednesday. You can see this is a low. Price swept this high, short term high. Price swept that. Price broke this low. You can see broke that high, broke this low. That is a break of a low. And if you mark our premium and discounts, that's using the entry metrics, you can see this is our premium because we're looking forward to sell. So we are waiting price to trade into the premium, and this is what a discount. Price trades into that. This is the 1 minute time frame. So you are looking for any fair value gap in the premium to trade or to sell. But in this case, there's no inefficiency there. Price is totally efficient, but price has a high, which is an inducement. So price trades into that, broke that high, and that is where I'm selling from. I'm selling from there, guys, to what to this outside liquidity, and that was how I took Friday's trade. After that, you offload all your profits here because on Friday I'm going to talk about this in our next lecture. The next lecture could be dropping next week. Yes. Why price always retraces on Friday? All those things. It changes back to weekly range. That's a topic for another day. But this is everything I took on Friday, and this is all the trade for this week. There was no trade on Monday, but there was a trade on Tuesday, Wednesday, Thursday, Friday. And if you do not take any trade, you can use this particular video to go and study the charts, backtest it very well, see how you could pick trades from these levels the way I did, and that's how you learn. All right. So now we'll go to the weekly forecast. The weekly forecast I promise will be very short because most of the things I talk about are just things that are already happening. So there's no much analysis to do. All right. Okay. So we have dollar index. As our custom is, we always look at dollar index for the first for the weekly forecast. So what is it I want to see on dollars? Because at this point, this level is very tricky. You see, we have this sell side imbalance, buy side inefficiency. You can see, and price trades into that, like we discussed 2 weeks ago. And you can see what price is currently doing. Still inside that fair value gap, but we have a relative equal low, sorry, relative equal high inside that fair value gap. Look at this. This is a relative equal high inside that fair value gap, of which price just took out. So that buy side liquidity, which price just took out, could be what will fuel the price downward next week for dollar. So those of you that are trading dollar pairs, be careful of this sell because things can just start buying. It's good space can just start buying all of a sudden, and you'll be surprised. Oh, how is it doing? Is it your support? Is it your resistance and stuff like that? But this is only just correlations. You should do your proper analysis before you pick any trade. Okay, this is only correlations. So that is what I'm seeing for the dollar index. After taking that high, that buy side liquidity, we might likely push downward in the coming week. We might likely push downward. You can see this level was outlined since 2 weeks ago. I wanted price to reach for this level since 2 weeks ago, and you can see how price is perfectly trading into that level. Let's look at Euro USD. Okay, see the same thing, almost the same thing for Euro USD. We had a premium and discounts marked out, are Fibonacci marked out. We wanted price to trade into the drawn liquidity on the discount. You can see this is almost the same thing with the entry metrics. One price to trade into the drawn liquidity on the discount because we are looking forward to buy, and price is currently inside that drawn liquidity. All of these levels are inefficient. Sorry, all of these levels are efficient. The next drawn liquidity we have is this low. This is relative equal low. You can see them there. This is relative equal low. So if Euro USD, if USD is coming down, then it's probably coming down for this low. USD is coming down. It's coming down for this low. Either way, this fair value gap can also act as a rejection point depending on what dollar is doing. Okay, so whatever your bias is on Euro USD, I think I'm bullish. I'm bullish from that level. If we can be bearish, then we are bearish to this low. Okay, before we start being bullish. So Euro USD is fully bullish for me. Although you can still do your analysis, your proper analysis. Don't just trust me because I'm bullish. I don't trade USD, I trade Nasdaq. So this is GBP USD. So GBP USD almost the same thing like what Euro USD because this pairs correlate, right? We have this is a weekly fair value gap there outlined there because that's where I want to see price trade into. But before price trading into that, we need to see price come down, take out the liquidity and go back. Something must always be there that fails price. It must always be something that fails price. That's what you should understand. It could be fair value gap, it could be highs, it could be lows, but something must always fail price. So if price wants to go up, you can see this level. Price trades into this fair value gap in order to go up. Price took out this relative equal low in order to go up. Now price is doing the same thing. There's no fair value gap because all of these levels are efficient. So price is likely to trade into this low, take out this low, then start going up. So if you are trading GBP USD, expect price to take out this low. If you have a sell setup on GBP USD from next week, then expect all your profit to be taken after. Expect to sell to this low. Put your profit target in this low because after that, price is likely. I'm not giving you full assurance, right? Price is likely to reject from this liquidity after taking out that buy side liquidity. Price is likely to reject from there. Okay, so now let's look at Nasdaq for those of you that trade Nasdaq. Okay, so this is Nasdaq, and you can see I talked about 2 weeks ago where the price just rejected from this value gap, and I said it. I told you with full confidence because this is what I trade. I told you with full confidence that Nasdaq is coming back down, probably for this value gap. We still have another tiny value gap here, and we still have a another block here. Sorry, and price is currently in the other block, and you know that other blocks, value gaps, highs, lows are point of rejection. So Nasdaq seems very, very bullish to me. Very bullish because we are currently in another block. If next week opens and takes out Friday's low, then we could be very, very bullish for the rest of the week. So we are in the point of rejection now. I'm expecting price to start buying. You can see what GBP, Euro USD, and Nasdaq is doing with dollars. Dollars is in a point of rejection, just like Nasdaq. Euro USD is a point of rejection, and same with GBP USD. So all of these things just correlate. And when you see this correlation, trust me, guys, it's very beautiful. It's very, very beautiful. Also, if we are buying, if I was a swing trader, this will be my first target. This volume imbalance be my first target if you are buying. So if I was a swing trader, that would be my first target. Although we still have a buy side liquidity here, but probably I'll take partials here. So for those swing traders that want to trade Nasdaq, it's time to start looking for buy setups. And you know the accumulation, the manipulation, and distribution lecture where I say when a new week opens, price takes out the previous week low, then the rest of the week is bullish. When new week opens, price takes out the previous week high, then the rest of the week is bullish. But there are some weeks where price just trade one side. It does not take out previous week low, it does not take out to reject, it does not take out previous week high to reject. It just keeps going further and further. These weeks are very rare, but yes, they happen. Okay, so that's my forecast for this coming week, and that's the review for last week. So I hope you find this video insightful. I hope you learned one or two things, and also I'll be dropping a new lecture next week. I think I'm not going to expose the topic yet, but it's a very, very important lecture, and I'm going to simplify it in a way that any beginner can understand. So don't miss that particular video. If you like this video, like and subscribe. So until next time, be safe.